From my point of view, the biggest issue is reviewing the structure, reviewing the information that you've plugged into the insurance structure, reviewing excess levels that you've selected, reviewing contractual obligations as far as, okay, well, what have we signed up for? What contracts are a risk that's going to effectively impact their cash flow? And from the insurance cost perspective, how can we reduce that? Where are we more exposed? Where are we less exposed as far as, okay, can we look at the plant and equipment? There's less operational, so we can bring it into tighter security and uplift the deductible to something that's going to provide premium relief under the plant and equipment. Are we, under the liability, looking at the turnover that we've declared, limits that we've bought? Because we're also very mindful that during a different economical climate, that gutting covers isn't always the solution. It can create more exposures, or you don't want to risk paying large deductibles because essentially you've got to fund that. So if something is stolen, you don't want to carry a $50,000 deductible or $30,000 deductible. You want to reduce your exposures as far as your excesses are concerned. So that's and every industry I found has a very different appetite. So it's about sitting down, working out different solutions for different clients that need that quick cash relief.
Yeah, for us, it's certainly cash and cash flow is number 1, 2 and 3. Making sure that businesses needing to understand what their cash flow forecasts are actually looking like, if they're eligible for JobKeeper, how the new JobKeeper 2.0 is actually going to impact them. If they're not eligible, can they survive? Forecasting models are very important for our clients at the moment, because if they're looking 6 months ahead with no more access to JobKeeper, just as one example, and they haven't really reviewed the underlying nature of their business, where they think their income is actually going to level out to, and what their costs are, then they're in trouble.
Ross, I was going to ask as well, like that forecasting, is it factoring in JobKeeper may be gone, but also rent relief, loan relief, all of these normal ATO is coming back on board? Are they factoring in that? Because that's probably one of the concerns we're seeing with our clients as well.
Yeah, they are. And the real thing that I'm not seeing at the moment is businesses' ability to refinance or access, or their desire to access more loan funds in order to cover off on the future activity that's going to require them to actually start making payments or higher payments when all those concessions have essentially ended.
Yeah, we're seeing particular pain points around those areas, particularly around employment. Employment law is an area which is complicated enough, and JobKeeper actually has made it more complicated in many businesses, and it's actually coincided with some fairly significant changes to modern awards, which were happening anyway. But there's a lot in that space that many businesses across a range of industries are grappling with, and will take some time to work out. We're also seeing pain points around leasing, obviously, and landlords and tenants. The uncertainty around what you do if you're a landlord with tenants who need relief, and also tenants who are having to negotiate with landlords without really having a good idea of where they'll be. So those things have created pain points. And just generally contracting. So when you have a massive disruption like this, it disrupts supply chains, and it disrupts significant works that might be being carried out. So everyone pulls out their contract, and everyone wants to know, okay, what does the contract say about delays and disruption and extensions of time for key obligations, and variations as to scope or price, etc. So a lot of analysis around contracts. So that's probably the main sort of pain points we're seeing where clients are seeking advice.
Look, I'll probably add to that then in the finance space. So the pain points, there's some now, and I think it's what we don't know as to how the banks and finance is going to react going forward. So yeah, cash flow support, credit support from the banks at the moment. It's a challenging and difficult field to navigate. It's been evolving and changing rapidly, and most banks' appetite is pretty low. Risk is high in their view, and it's becoming more and more difficult to raise further funds. Look, I think a good thing that we saw through the COVID period, the banks all came out with support for their clients around mortgage loan repayment relief. What I think I'm disappointed in is at least not perhaps explaining the consequences, which is where we started to, and we were guessing a little bit because there's still a bit of an uncertainty, but it was trying to educate clients around, take some loan relief now, but what is it going to mean in the future?
That's right.
And effectively loan relief, it's hardship relief. So understand the signal to the bank is you're in hardship, you're getting loan relief, and then now everything's okay and can we get some more debt? And it's a sort of conflicting message to a degree that the banks are grappling with and coming to terms with, and they're all approaching it in very different ways. And adding to that, I suppose, is it's become more complex. So we are making sure, key message to our clients is don't expect this to be a simple, quick process like it perhaps was pre-COVID. Allow some extra lead time. And we might still get the right result, but it's going to take longer.
And that all feeds into what the banks are doing, does feed into certain parts of insurance around your premium funding. We were dealing with different attitudes from different premium funders, whether they were banks or the specialist funders. So, and that then very much into the trade credit space. We saw a very swift reaction of the trade credit insurers on a global level, not reviewing what was happening locally in Western Australia. So essentially people that were buying up covers, limits slashed, and it was very quick, and it was literally week by week on different industries dealing with different problems. And essentially we're still dealing with the end of that now.